It was a decent quarter. You're absolutely right. If you look at headline PTI, for example, at just over 800 million, it's down roughly 30%. But on the other hand, if you adjust it for certain one-offs, including some legal provisions and restructuring on the back of what we announced at the end of July, we're actually up 29% on a PTI level. And if you adjust it for FX headwinds, the Swiss franc has gained 8% against the dollar year on year. We're actually up 41%. So in underlying terms, I'm actually very satisfied with the pre-tax income.
If we take a look at the wealth management business specifically, obviously it was flattered in the year ago quarter by the InvestLab story. This time round, it seems that the numbers are flat. Is that a little disappointing in this environment?
As a Swiss franc reporter, you really should look at it at an FX adjusted basis. And on an FX adjusted basis, actually, our revenues were up 5%. So overall, we have been very satisfied with the development. We have net new assets of 11 billion, which is 6% annualized growth. And we have particular strong development in Asia. So overall, we are actually very satisfied with the momentum we have in the private banking business.
Just talking about the environment that we're operating in, you mentioned Asia and the stronger performance there. Could you spend a moment just talking about the dispersion you're seeing between Asia and your other businesses around the world, given the current COVID situation and the risk of further lockdowns in the autumn?
If you look at our franchise revenues in Asia, they are now 20% of our overall revenues globally, which is one of the highest of our peers. And we are up in the high 20s, 29% with respect to our franchise revenues. If you look at it in dollars, we're actually up 40%. So it's very clear that Asia is much stronger than the rest of the world right now. You also see it in capital markets activities, the Ant IPO, for example. So there's clearly a difference between what's going on at the moment in Asia, between Europe and the Americas. But on the other hand, the investment banking side has had very strong numbers. So we see the transactional revenues further increasing, whether it's in fixed income, in equities, but also capital markets has had a very strong first 9 months and also for a very strong third quarter.
I think the restructuring announcement in the second quarter was well received by the analyst community, but some are still a little skeptical about the revenue and the profit lines. And even though you had better numbers, they weren't as strong as we've seen in some other banks in Europe. Is there an underlying problem still with revenue and profitability in the IB business?
Not at all. I think we've had actually very strong momentum if you look at it both on a 9-month basis or on a third quarter basis. We had also a strong comparator in the third quarter 2019. But if you look at fixed income, sales and trading, equity sales and trading, capital markets, I was very satisfied with the development. It's a more global business now. It's a more diversified business. And from that perspective, I'm very satisfied with the performance.
Having said that, I mean, the 5 to 10% gains as reported for fixed income sales and trading, again, it does seem lower than we've seen in other banks. What do you think the prospects are for you to improve that as we go through the fourth quarter and then into the first quarter of next year?
Our traditional strength in fixed income is more on the credit side, maybe less so in macro and FX, which have been benefiting from the market developments in 2020. But if you look out, given also the low interest rate environments, I prefer to position as we are right now.
Can I ask you, again, on the capital markets advisory revenue number, plus 33%, again, looks very respectable, but do you think you can maintain that kind of run rate?
I think so, because especially the strongest part of that business is actually on a relative basis our leverage finance business, where actually the market has been more subdued. We had a very strong performance in equity capital markets. We are top 3 globally in IPOs. We have very strong momentum also in debt capital markets on the investment grade side. So I think we are well positioned, especially once the LevFin market improves.